Welcome to the Farmers.com Risk Management Daily Commodity Market Bottom Line for June 10th, 2015. My name is Mike Steenman, Chief Commodity Strategist with Farmers.com Risk Management. Well, it's USDA report day. Let's go quickly into the numbers. Let's start off with wheat. This was a wheat production report, not so much for the corn and soybeans. It's really more of a setup for the June acres report. And even then, I think it's too early for the USDA to adjust acres and yield. Some thought that they might do it today, but they did not. This report was bearish wheat because total wheat production came in at 2.121 billion bushels versus expectations of 2.095. Global numbers 2.024 versus 2.03 for 15-16, so kind of slightly lower there. Overall, it's a disappointing result. We felt that it was up to the USDA to help the bulls push harder to continue the short covering rally. I'm not sure that happened today. Basically, the USDA threw some cold water on wheat again, reminding us that all the big global bushels come down. The key going forward, the market will trade back to weather. The key is going to be what happens outside the United States. Right now, the market's been nervous. Shorts have been covering because of dry weather in Western Canada, Europe, Russia, China, India, Australia. So, on corn, this was a neutral report, 1.771 billion. Again, early to really adjust a lot of these numbers versus 1.76 billion. Pre-report estimates, global numbers for 15-16 coming in at 195.2 versus 192.1. Essentially, the balance sheet was pretty well unchanged for corn, and then finally soys, 475 million for ending stocks in 15-16 versus 500. That's supportive. Look for the close today. Could be wheat leading the charge higher, but wheat's kind of disappointing, so it may weigh on the rest of the grain complex. Global soys for 15-16 come in at 93.2 versus 96.3. South America still looks quite large going into next year. So overall, it was a bearish report on wheat, neutral corn, friendly soys. Over the next 30 days, look for some continuation of this short covering rally, really up to weather. I got to think that the ideal perfect growing conditions that the USDA has printed thus far is slowly going to deteriorate, but this is reminding us of last year. Cool, wet weather. It doesn't look like any heat, excessive heat, through the month of June. Over the next couple of weeks, it's June 10th, so rain makes grain. We'll see what happens, but it's going to be tough for us to rally like we did in 2012 unless we stop raining. In fact, the month of May for the U.S. Midwest was probably one of the highest on record, if not a record. So what do we do? Well, if you're looking to sell some wheat, maybe you're catching up on sales, you missed an opportunity, you could maybe sell into this rally. We were actually getting a buy signal on oats yesterday, so that was looking interesting coming back. We still have a buy rating on canola for higher prices, and now Chicago and Minneapolis wheat, not necessarily Kansas. We can get the buy on Kansas after canola in the house proprietary buy signal. So we'll see. The close is the most important, so we'll see what happens here today. See whether the bears defend their short positions or they continue to want to take some profits and remain nervous. But you could sell into this rally because we've been here 3 times on wheat. Chicago wheat resistance at 550. We have not, or 540. We have not been able to break it. I thought maybe today the U.S. report might do that. Unfortunately, that's not the case. It's going to have to go back to weather. Corn could see a rally up to 4 by the end of the month. Kind of an opportunity there. And then on wheat, if we can break that resistance at 550 or 200-day moving average at 546, we could move back to that 575, $6. Still lower than the rally we had in late December of 2014. In other news, we've got a bear suggesting that El Nino dry weather pattern is going to continue. Very little precipitation the next 2-3 months. So they've lowered wheat production to 23.6 million versus 24.4. Still a big crop, We got to get down to like 15-16 million to really move these markets. We'll see. That may still happen. It's early days. And they've also lowered their canola output down 300,000. So again, playing into that whole canola bullish story going forward. And then Agriculture and Agriculture Canada saying that western prairies remains dry. Southern Manitoba got enough moisture, but not a lot of moisture in the forecast. There is weather models suggesting rain. We'll have to wait and see. But if that dry weather continues, look for the gold prices to head back up. Some profit taking, some recent rains, and a higher Canadian dollar weighing on canola futures. Until next time, thanks for watching. Take care.